What's good, YouTube? Pursuit of freedom in the house. Want to bring to you today some capital management rules and strategy. This is probably going to be one of my most important videos when relating to stocks and trading stocks, period. Because I believe that following rules, setting up rules, and doing your best to stick to following those rules is truthfully what separates the winners from the losers. It's truthfully what separates trading stocks from merely gambling. Strategy, rules have to be followed, man. And you want to have rules in place because we're talking about money. Money is hard to come by. Now, to get some of these words out the way, each person is going to develop their own strategy over the course of time, right? And if you're brand new to the market, and trading stocks, take this as a grain of salt. You know what I'm talking about? If it don't mean anything to you, toss it over your shoulder. But if you really want to generate and build a business based on the market, which is the strongest connection to money out there, the best place to create a business, I believe. You know what I'm saying? Because you don't have to worry about where the money's coming from, and if the money's coming in, it is there in a massive abundance. You have to follow rules. You have to have strategy. You know what I'm saying? And I'm gonna go ahead and get to that. Now, some rules, discipline, and strategy, right? And to tell you earlier on, the market truthfully is stacked against small accounts. And that's pretty much who I think I'm talking to because I still have a small account myself. I'm really not willing to risk any more than I have in my market accounts for right now, being that I know I'm not a professional trader. You know what I'm saying? And that's just being honest about it. But and also, there aren't none of the traders that I follow are truthfully talking about account sizes of $1,000, $500, $2,000, $4,000. I mean, small accounts. You know what I mean? Even a $10,000 account is considered a minuscule, minute account in the stock trader world. Now, some traders, every trader you follow or you might watch, and I encourage you to look at all of the gurus. I'll put some out there for you. The first guru I invested in, as in I bought his stock knowledge, was Cameron Fuchs over at Fuchs 4 Trading. The second that I invested in was Tim Sykes, and Tim Sykes is one of the big gurus. The next guy I will put out there from YouTube is Bulls of Wall Street, and then Warrior Trader. Those are my top four right there. Not necessarily in that order, but those are my top four. And the reason why I'm mentioning that is because number one is education, education, practice, practice, practice. I mean, the possibility of you getting rich is greater in trading stocks than it is your day job. But you wouldn't sit for any test without studying for it, right? You wouldn't sit down and take a test without studying for it. They don't let you drive a car without putting you through a test first before they give you that license, right? And you can kind of see what I'm getting at. Like I work in healthcare, but I couldn't go work in healthcare putting people's lives at risk without study, without taking a test, without practice. So I mean, don't feel like getting into the stock market or getting into anything where you put money at risk is any different. What I also have in rule number one is 9 out of 10 traders fail and quit. Now, when I first got into the market 2 years ago, that saying is actually goes a little bit differently. They say 9 out of 10 traders lose money, but I believe that that's bullshit, so I didn't put it in that manner because 10 out of 10 traders lose money. 100% of traders lose money. The difference is that 1 out of 10 traders, they stick around long enough to make it work. One, two, they master losing. Now, what I mean by that, I'll get to in a few minutes, but you do have to master losing. You have to have a limit. You know what I'm saying? Rule number two, never trade with money that you can't afford to lose. My first two rules aren't, you're not even in the stock or anything yet. You know what I'm saying? But this is just some things to follow, man. Hey, take it as a grain of salt. Set up your own rules, but never trade with money you can't afford to lose. Rule number three, which I'm gonna go to my TC2000 software. I'm gonna jump back and forth a little bit between this here little PowerPoint presentation and TC2000 so I can kind of show you what I'm talking about. But rule number three is always check the market's sentiment. You always want to know what type of market you're looking to trade, especially if you have a small account and you can't short sell. So if you're only buying, you want to make sure you're buying a buyer's market. Uh, Market sentiment, what I mean by that. Okay, so I got you looking at TC2000, paper trading practice, paper trading practice. I didn't practice my first full year, but my second year, I see the absolute importance and the difference in my confidence now that paper trading practice has given me. But anyway, the last week, I got you looking at different market indexes that represent the entire market. But the Wilshire 5000 I got over here all the way to the left or to the right of your screen is representing 5,000 companies. 5,000 companies for the last week of November pushed higher to the tune of 4%, at least in the Wilshire 5000. So last week, I would say kind of sort of was a buyer's market. But the overall sentiment of the market since October has been bearish. So I've been trading stocks with extreme caution. I did make a extra dumb mistake in the trade, which I'm gonna have to correct and come back from. But I believe I'm gonna do that, and you're gonna see that live because I'm gonna put those trades out there. Back to the rules, right? So rule number 4. Finally, we actually get into being into some trading. After you take some time to educate yourself and practice, because 9 out of 10 traders fail and quit. Rule number 4 is if you take a trade, cut losses quickly. Now, from one of the gurus that I follow, Tim Sykes, that's his rule number 1. Cut losses quickly. Great rule. From the greatest stock trader of our time, Warren Buffett. His rule number 1 is never lose money. His rule number 2 is never forget rule number 1. So cutting losses and not losing money is got to be the most important thing, or one of the most important things when it comes to strategy. Because, like I said, the capital is the product of this business. So you have to protect your product. You can't allow it, you can't hand it to the market. Oh, there is a market tuition to be paid, but you want to limit that tuition as much as possible. So I'm gonna move on to rule number 5. Um, I'm a I'm gonna tie a couple of these rules together. Know your max pain if you do take a position, and I'm pointing out this if that I'm pointing. You know what I mean, that I've been mentioning in the last 2 rules, because sometimes the best trade is no trade. I mean, if you take a position in rule number 4, if you take a trade in rule number 4, cut losses quickly. Know your max pain in rule number 5 if you take a position. Sometimes it's better not to even trade. It's better to just watch. If there's nothing thoroughly exciting you, making you want to jump into a trade, then paper trade. There are so many different things out there. I mean, you can type in paper trading in Google and you'll find apps, you'll find sites, you'll find ways that you can paper trade. You can even paper trade on pen and paper. If I bought this stock at this price and sold it at this price, my gains will be what? Right? So, I mean, there's all sorts of ways to practice in this thing. But you want to get in touch with the market, get in sync with the markets through education and practice to begin with. All right, now I'm jumping all over the place. For me, within rule number 5, I want my max pain to be commissions. And that's it. Commission cost for me is $10 in and out of a trade because I trade a little bit often. So my commission cost is going down. I use E-Trade. Brokerages, that's another subject for another day, but I really don't want to get into brokers, honestly, because the broker you use doesn't matter if you don't know how to trade. It don't matter what broker you use if you don't know how to trade. It don't matter what the commission cost is when you don't know how to trade. So education and practice comes first. Rule number 6, don't chase stocks. Now, in the beginning, I did too much of this, but yet and still, even with me chasing stocks, I can tell you that I got into trades based on my strategy that I still use right now. And I found myself up, but with a small account, man, greed, greed. I mean, because a small account forces you to be greedy, forces you to be greedy. That's why I got the market truthfully is stacked against small accounts at the top. Because with a small account, man, you have to just lock in some gains. Sometimes them gains gonna be to the tune of 30, 40, $50. But the way that I do it now is just look at myself and say, has my bank account ever grown by $50 a day, $20 a day, $30 a day? Nah, you're not getting into trading stocks to make $30 in a day. But once again, has your bank account ever grown $30 a day? And that's how I allow myself to not be greedy. That's how I fight the greed monster. Because when you got a small account, sometimes that's all you're gonna get. And if a stock is running, it's already up 80% on the day, don't chase it. You'll find yourself in a losing position more often than a winning position by chasing stocks. Rule number 6, which I'm gonna tie rule number 5 and rule number 7. I mean, I'm gonna tie number 5 and 7 together in this next slide. But you want to establish a proper risk to reward ratio. Now, risk to reward is like, and I actually got them backwards, so I need to edit that a little bit. I'm gonna go ahead and do that. You want your risk to reward to be, because I'm not perfect. I don't know what I'm doing, right? Go back a little bit. It's taking me forever just to get this in. 1 to 2. You want to risk. You want to risk to reward to be 1 to 2, right? 1 to 2. So you want your risk, which is the first part of that, to be half of what your reward is. You know what I'm saying? Which I'm going to elaborate on in the next slide. But I mean, like just to speak on that for a second, if you're risking $50 per trade, that means you want your reward to be $100, half of what your reward would be. I get into that in a little bit more. You know what I mean? Number 7 or number 8, I just want to point out that, this is not quite a rule, but it is in a way. Realistically, you can look to gain about 10 to 20% per trade, 20 to 40 cents on your shares per trade. So when you become good at it, man, and one strategy that I find myself, if I utilize it each time, I lock in gains well over, you know what I'm saying, my average. Like I increase my win ratio. If I'm in a trade and the trade gets up 20 to 40 cents on my shares, and I say, you know what, I'm up 20 cents per share, I'm up 40 cents per share, I'm a sell. When I do that mechanically, instead of looking at the trade and looking at the stock and saying, man, this thing might run up another 20, 30, 40 cents, and I can lock in 80 cents per share. When I do that, I typically lose a tad bit more often than I win. But if the stock gives me 20 to 40 cents and I say, okay, 20 to 40 cents, I'm going to get out, I win more often than I lose. All right, but that's some more stuff for later on. That's another video probably. But all right, number 9. If the stock doesn't give you 10 to 20%, um, then trade the price action. I got to go to a chart and show you what I mean by that. But if the stock doesn't give you 10 to 20%, then trade the price action, meaning take what the stock gives you. The stock might only give you 5% of your money. Hey, 5% growth is great. The whole market only does 10% in a year. So with a small account, you have to get used to locking in small gains. Slow and steady wins the race. You know what I'm saying? With a small account, yes, it's going to take you longer, but you can also fund your account from saving money. Hey, through a yard sale, go sell some crap you don't need, you don't use. Work extra hours on your job. The mission is to get away from having to punch a time clock, period, right? But through your learning phase and through your becoming a better trader phase, you want to fund your account by any means necessary. In all honestly, we want the market to fund the account, but you got to trade your way there. And sometimes a stock is not going to give you 10%. It's not going to give you 20%, especially if you got into the trade late. All right, I got to show you what I'm talking about. All right, so I'm going to go back to my Trade King. I'm going to go to the number one stock that showed up. If it'll let me, what the world's going on? Okay, right. So I got you looking at BRQS is the ticker symbol. Borgs Technology is the company. Now I'm gonna look at my 5 minute chart. I always look at a daily chart and an intraday chart. Actually, I don't like that. I'm gonna go to OGen. I like OGen a little bit better, especially for this Monday. So I look at the daily chart first. I see that OGen has monstrous big spike ability, but on Friday it pushed up to the tune of, you're looking at my secret sauce over here, my master list, it pushed up to the tune of 33%. Now, unless you were in this stock the day before or you caught it right at the market open, you may not be able to lock in this 33% gains. But let's look at this chart on the intraday side. This is one thing I love about TC2000 software, right? So I'm looking at single minutes. Let's break it into 5 minutes to squeeze in the time frame a little bit more, right? So me, I typically only can trade the first hour of the day because I work the night shift. So I got to get some sleep during the day. And you got different animals within the day. What I mean by that is at the market open, which is the first hour between 9:30 and 10:30, the market acts very differently than it does over the course of the entire afternoon. So if you wasn't in this stock yesterday before it gapped up, you see that it closed at about $1. And it's at the 29th of November, looking in that box. And then on the 30th of November, it had gapped up a total of, looking in that box, about 9-10%. So if you didn't catch this thing at the market open and you got in a little late, right? Like on the entire first 10 minutes, it gave you pretty much a solid move. Look at that box. That's 20% exactly. From the market open within the first 10 minutes, look at the top of that box. That's 940. So the market opens at 930. At 940, you can already be up 20%. And this happens a lot. You know what I'm saying? Sometimes you got to get in and out of a stock in 10 minutes. But let's say that you did like I did in my beginning and you bought the top of this thing, right? You didn't get in until $1.29. So the absolute high that you could possibly gain is 4% if you got out at 135. Because like I said, I only got the market open. So 10:30, I got to go to sleep. I got to work nights, right? So if you got in at 129 with how many ever shares you got, and you got out at 135, you gained 4%. So sometimes you're not gonna get 10%. It depends on when you get into the trade, um, and how much the trade pushes up. It depends on your time frame too. As I just told you, my time frame is limited. I only truthfully have the market open to try to trade stocks. I mean, as you can see, looking at that line, this thing ended up breaking that daily high, but it didn't break that high if you're looking at that box until about 2:10 in the afternoon. At 2:10 in the afternoon, I'm snoring good because I work nights, as I said before. You know what I'm saying? And it took a while. You know what I mean? This thing dipped off after the market opened. People took some profits, so the stock dipped off, and then it took this stock. Look at that box. It took this stock another 4 hours. Okay, when it broke that high, it took the stock 3.5 hours to break that high again. So things change over the course of those middle hours. You see, this is 11 a.m., 12 p.m., 1, 2, 3. The market closes at 4. and it's staying closed at the higher day, that's a good sign going into the next day's trade. So I may need to look up and do a little bit of reading on that. Let's get back to the PowerPoint, right? Uh, Learn it. So, down here, once again, like I said, man, when you enter these trades, sometimes you're not even gonna get 10%, but I'd rather lock in a gain of any sort over locking in a loss. You know what I'm saying? Like I said, I want my max pain to be the commissions only. And commissions for me are $10. I'm gonna elaborate on a little bit more of that in that next slide. You know what I'm saying? Always trade the ticker, trade the price action, trade what the stock is telling you. And I'll go back and elaborate on what I mean by that. In the same example, so if you get in, you know what I'm saying, a little late, or if you get in, even if you get in early, you get in down here at $1.15 and this thing pushes up and it sets a high and then it immediately have a big sell, you'll see often that once the selling begins after a big push, a lot of times the movement is done for now. And in this case, it was done for now. So you got to just obey what the stock is telling you. It sold off right there. And if you didn't get out at that high, it gave you another chance. You got lucky and it pushed back up and you could have got out at 130. So if you're in at 115, you get out at 132, you just gain 15% of your shares. That is within 10 to 20%. That is definitely a worthy trade. If you gain 15%, you are outdoing what the market does for the entire year. And this can happen in looking at that box, 20 minutes. You know what I'm saying? This can happen in 20 minutes. You can beat what the market does in 20 minutes. So sometimes you just got to lock in gains, man. Back to the popper. Yeah. So rule number 10, I just gave 10 because I'm long-winded and I will be talking forever. I don't want this to get too long, but I'm going to allow this one to stretch out a little bit because I'm talking about rules, a strategy. And like one thing for me, at least is to tell you the greatest weakness for me, like when you find yourself hoping a stock will return to the price you bought it at, get out the trade. Get out the trade. Now, hope alone is probably the source of the source of a human's greatest strength. If you got hope, man, you can accomplish almost anything. You can accomplish everything. You mostly don't accomplish anything if you don't have hope. If you don't have hope that things will get better, you don't accomplish anything. But in the stock market, hope to me is your greatest enemy. When I find myself hoping a stock will return to the price that I bought it at, I feel like I already know the game is over. I already know I'm finna lock in a loss. And I'm not finna hang around because I would hope, trust me, man, you can have way more hope than the market will reward you for. You can hope a stock is going to get back to that price all you want. And it can take months to years for that stock, if ever, for the stock to return to the price you bought it at. So if you buy into a stock and you find yourself in a losing position and you're beginning to hold, just get out. Tomorrow will give you another opportunity to trade again. You know what I'm saying? Tomorrow will give you another opportunity. The market will be open. The market will be open. You know what I mean? As long as the world don't go to hell in a handbasket before the market open, right? You know what I'm saying? You're going to have another shot. You're going to have another opportunity. And there's opportunities every day. Next slide. So what I meant in rule number 5 and rule number 7, when it came down to max pain for rule number 5 and risk to reward ratio in rule number 7, right? And I got this here, risk to reward, a little backwards. I should say reward to risk because I got it 2-to-1. You don't want to risk twice as much as you gain, but you want to be rewarded twice as much as you're willing to risk, right? And that's and I'm getting away from these being rules. This is just a slide I kind of want to really elaborate on risk to reward, max pain, and get into a little bit of management strategy. So max pain, truthfully, is just what is your maximum loss? And I'm gonna just tell you to give you a percentage. Every person is different. Some people their max pain is a number, as in a dollar amount. Some people's max pain is going to be a percentage. That's why I told you to take this as a grain of salt. And over time, you can generate your own rules. But this is just to give you some food for thought to feed on, right? Uh, Never lose more than 5 to 10%. That's just some advice I give you. Have I lost more than 5%? Absolutely. You know what I'm saying? Have I lost more than 10%? Absolutely. But I'm growing, I'm learning. Every trader out there has lost a humongous percentage. Trust me. Um, you're not going to be right on every trade. You're not going to be right on every trade. You got a 50% chance on any trade you get into of losing. That's just the odds. 50-50 off the top. You know what I'm saying? So with the small account, commissions will eat you alive if you trade a lot or overtrade. Just some more food for thought, man. Um, there is a brokerage out there called Robinhood that is commission free. I don't necessarily care about that because once again, if you don't know how to trade, commissions don't matter. And you still will pay a great market tuition if you don't know what you're doing, if you don't practice, if you don't educate yourself. So that's always the start. You got to start with education. After you gain some education, you got to practice. After you've practiced for a while, then put some of your hard-earned money at risk. This is just another source of income. It doesn't have to be your whole life. And like I've showed you at the beginning, 9 out of 10 people fail to do this. You know what I'm saying? Because you're risking money, and it's too much to risk for some people, right? But if you're wrong more than 50% of the time, and you're not practicing a good risk to reward ratio or risk to reward practices, capital management practices, commissions will eat you alive. Even if you are practicing, but you're not gaining, commissions will eat you alive. So if you got $1,000 account, let's say you want to survive 100 trades. So you take your $1,000, divide it by 100 trades, that automatically gives you a max loss of $10. If you want to survive 100 trades with $1,000, and you got a brokerage account like mine, which is E-Trade, and I pay about $10 per trade. That's $5 when I buy, $5 when I sell, for a round trip total of about $10, right? So that means with a small account, your true max pain, if you want to survive, which is that's all you're looking to do in the beginning, you're just looking to survive. You're looking to not blow up your account. And I can tell you that it's two years in for me. I got 3 accounts and I haven't blown up one, right? Um, and that's because at no point have I ever overtraded. I'm always extremely cautious, you know what I'm saying? And I'm getting even better. And I'm tightening that up and I'm tightening that up and I'm tightening that up. I mean, I'm truthfully trying to get to the point where if I take a loss, it's $10. As a matter of fact, what I truly want to do is get to the point where I'm not taking a loss and I'm always covering at least the commission costs. So that means I got to get up in a trade to the tune of $10, or like you get out of the trade before the trade pulls back and you're in losing territory. That might be another video for another day. You know what I mean? I might be trying to overfeed you right now at the table. But risk to reward practices, you want a win ratio twice the size of your losses. So if you win $100 each time, your maximum loss can only be $50 each time. Like I've already said, the odds are is that you will lose on 50% of your trades. So let's just break that down into some numbers. And let's say you take 100 trades, you win 50%, you lose 50% of the time. And then you got to add the commission cost to that. 50 trades for $100 gives you $5,000 gained. 50 trades losing $50 gives you a loss of $2,500. You simply take that $2,500 minus it from the $5,000 that you gained, and before commissions, you had $2,500 gain. $10 in and out times 100 trades. Now you're at $1,000 in commissions for a grand total of $1,500 gained every 100 trades. So risk to reward is extremely important. Limiting the max pain that you take is extremely important. You know what I'm saying? Um, what your max pain or your max loss is going to be, I'm never going to know what that is. That's something for you to decide on your own. But for me, and it's hard because emotions do get involved with this trading. You'll find yourself when you buy into a stock, you get oh so emotional. And I will show you how I would get as best as I can utilizing TC2000 to just give you this same example. Um, Me at my beginnings, I would get into a trade. Let's say you got into the trade after the first 5 minute candle because it already gapped up. And for the first 5 minutes, it pushed up. Let's break this into 1 minute candles and really look at what's going on here. I'm going to slide and get rid of the after hours. I can get rid of everything up until about 10:30 because that's the time frame I want to trade. And take a look at that. At 10:30, this thing is now at perfect gain territory. So if you take this first 5 minutes of the market, it gapped up. At the open in the first minute, it pushed up to the tune of 2%. And then for the next, looking at that box, for the next 5 minutes, it maintained right there. So most of the time, I'm buying this breakout right here in this first 5 minute candle to break the initial opening high that was set in the first 5 minutes, which is at $1.14. So I will get in this thing and then it'll begin to spike, right? And most of the time in my beginnings, I see that spike, I begin to relax. I used to. I begin to relax and pull back, and I would lean back in my chair. I went and jump on my E-Trade account and put in to sell, you know what I'm saying? Which for the next 3 minutes, you're getting the majority of the strength for this movement. Once again, you get 5 minutes of stagnation. It kind of plays with it higher day, not being able to get above it. But in this fifth minute, 6 minute, at looking in that box at 9:36, that's when the strength begins. One thing that I got from all of my mentors is that you want to sell in strength. You want to sell this thing while it's punching up like this. You want to be getting out during this process, right? Because after that, if it gets a lot more choppy, it takes a longer time for it to break the new high that was set up at 135, 136. So my problem in my beginnings would be that I would notice this breakout and I would buy right here. This is typically where I'm buying at. 5 minutes into the trading session, 6 minutes into the trading session, because I didn't buy right at the market open. And now that this thing is pushing up, I'm beginning to relax as if it's going to push up to, you know what I mean, 1,000%. I don't know why I used to do that at first, but I used to find myself getting comfortable and relaxing when I was finally in a winning position. And then this thing would push up and it would start to pull back. And then I'd be like, oh shit, I need to sell. I need to sell. Now, it done pull back from the highs. Look at that box, 8%. And I'd be selling right here if I sold it all. Right. And just being honest, in my beginning, my first year, I probably executed for the whole year 5 day trades. I wouldn't get in and out of a trade in a single day. I would always find myself with some hopium, hoping that the next day it pushed up again. Sometimes they do, sometimes they don't. You're taking a risk either way. You're risking it if you stay in. So this year, I started cutting that out and actually just executing a day trade. I started looking at this thing at, you know what? I told you 20 to 40 cents on your shares. I started locking in 10 cents on my shares. And that's all I got. Because sometimes that's all the stock gives you. So if you bought it right there, once again, at that high, look at that, you're up 18%, 18 cents and 15%. I would get out. I would get out. 18 cents, plenty. 15%, oh, that's beautiful. Hell, 14 cents, 12%, beautiful. 8 cents, 7%, that's more than a bank account ever grew my money. Beautiful. And I would get out. Well, that's what I'm doing now. And the account is growing. That's the name of the game. Growth. Period. You know what I'm saying? I typically am not awake for the rest of the day. But if you see, You get this break in the first 5 minutes, and then you get the what happens when stocks break out. You get the big push up to the tune of 17%, and then it sets a new high. That new high up at 135, that's the next good level to buy if you're buying breakouts. But it doesn't break out once again. It doesn't get above that level all the way until after 2 p.m. Like I told you, I'm snoring good at that time. See, after the market open, after the first hour of the day, it takes so much longer for the stock to actually break, if it is going to break again. But this second run was only to the tune of, look at that box, 3%. So 90% of your price action is at the market open. You know what I'm saying? And this thing is fortunately pushing higher. So I'm going to go back to the PowerPoint. And I just want to talk briefly on my strategy. You know what I'm saying? And just give you a little bit more food for thought. My strategy is mostly piggybacking. And I'm going to show you what I mean by that in a quick second. You know what I'm saying? But I'm going to go through these words, explain that to you, at least what I got typed up. I want the stock to give me a reason to get in. Like in that OGen I was just showing you, it was spiking. It jumped up in that first 20, 30 minutes. That is giving me a reason to get in. You know what I'm saying? You want the stock to be almost pulling you towards it rather than you trying to force your will on the market. If you haven't heard it yet, I'll be the first to tell you, you cannot force your will on the market. Hey, there are ways to manipulate stocks if you got enough money. You can manipulate a stock. If a stock trades 200,000 shares on a day, which I didn't even get into shares in my rules, because if you're trading a small account, more than likely you're gonna get into a stock that's at least doing 100, 200,000 shares, and you're not gonna be a significant piece of that of the volume traded. So you're not gonna be able to manipulate a stock if you only got $1,000 account, right? So the stock has to pull me in. I found a lot of my losses were me trying to anticipate. Like I would see a stock get into a kind of sort of getting close to a breakout pattern, getting close to a resistance level, and I would get in early, trying to maximize my gains, right? Because the earlier you get in, the more gains you have when the stock actually does break out. You know what I'm talking about? But the anticipation has cost me more than it has rewarded me. Now, in this second thing, the stock has to be doing what you want it to do before you put your money on the line. And I got a video on that. I call that my secret sauce, and I'll show you briefly. The video gets a little bit more in depth. What I mean by my secret sauce is so like if you're looking at this stock here, like what I would do in my beginning is I would try to anticipate. I would want to buy this thing on this day, hoping that next day it's going to give me another big green candle, like this green candle right here. You see that this candle engulfs this one. So that's a bullish engulfing candle, typically leading to a press higher. Not always, but it typically does. Just like this bullish engulfing candle engulfed. And then it kind of sort of pressed higher a little bit over the next couple of days. But oftentimes when I tried to anticipate a more of a move higher, the stock the next day sold off and came down. So anticipating didn't work for me. So instead, and I didn't have good scanners. I don't quite know how to use TC2000 scanners, if there's a way for it to do some good scanning. So instead, I eliminated the need of a scanner, and I brought the market to me and what I call my secret sauce. All right, so this is TC2000. It's right now, I'm on number 6, the number 6 highest gaining stock of Friday, the last trading day, because today is now Monday at 6:37 in the a.m. Out of 2,250 stocks, this is number 6. So by me having this watch list, this master list that I can pile stocks in, which is what I do. I pile stocks into this list. I'll show you how in a second to give you a little bit more knowledge, a little more food for thought. But at the market open at 9:30, this watch list is ticking. And it's going to give me, I'm going to click on this bottom one to show you that, okay, from here up, you're looking at 22 different stocks that are up at least 10% or higher on the day. Any one of these 22 stocks is giving you the best 22 stocks any given day out of 2,250. At least that's my watch list. Now, what I would do is I would come to TradingView just to show you right quick if you haven't viewed my review of TradingView. This is what it looks like once you're logged in. And me, I changed my page because this is actually white. I like the dark background. But I come over here to this hot list and following that cursor. And what that does, this is the watches at the top. I'll just show you right quick. The watch list. This gives you workday, which I'm gonna put this on my watch list. But anyway, I come over here to the hot sheets, which is what I call them, which is the hot list, and I see what TradingView has as the highest stocks on the day. And actually, I took this, I put this on my list on Friday when I woke up that afternoon because this stock is pushed higher. Anything that grows to the tune of 10% or better, I feel like is worthy of being on my watch, regardless of the price. So this $39 stock here that went up 18% in a day, let me slide that out so you can't quite see that 18%. So this stock, AMBA, that gapped higher for whatever reason to the tune of 18%, your account can grow by 18%. You know what I'm saying? And that's a gain. I add them to my list, my master list. So that was that AMBA. Oh, nope. I add that to my master list, AMBA. Okay, symbol is already in my list, is what they tell me. And I do that because I've already gone through and added those top gainers to my list Friday. And I built this thing over the course of 2 years. Top percentage gainers is all I look for. I piled them into this watch list, piled them into this watch list, piled them into this watch list. And then over time, I began to do personal watch lists. And I began to watch, some moving average crossovers, 13 EMA and 50 EMA. I started breaking down stocks, bank stocks, biotechs, Bitcoin related during the Bitcoin fever, cannabis, chemical, currently stalking. This is just lists of, what I'm saying? It's just a bunch of different lists that I started to create. Because when you get into stock trading, man, we all are mad scientists. We all are practicing. We all are experimenting, and we're trying to grow money. You know what I'm saying? We try to use the money tree. The odds are not stacked in your favor. But we try to use the money tree and test strategy over and over again, like a mad scientist, to see what works and see what doesn't work. What works for you might not work for me. And that's just different things, you know what I'm saying? So this AMBA, looking at this thing here right now, is up. I might be able to lock in some gains with that, depending on how high I push in the pre-market hours, right? But that's about all I wanted to bring to you, man. This is Pursuit of Freedom. You do want to set some rules. You do want to trade stocks by strategy and not just blindly be throwing money in there. You know what I'm saying? And the better you follow your rules, the tighter you follow your rules, the better. Um, the majority of these rules I'm putting in front of you are about keeping you from losing money. We all know that you want to gain 10 to 20%. That's why I put those all the way down at the end, because that is not the most important stuff. The most important stuff is limiting the pain, managing the risk, keeping yourself away from losing positions. And I believe that all starts with education, practice, practice, practice. I'm going to be a part of the 1 out of 10 that succeed, not the 9 out of 10 that fail and quit. 100% of us lose. 100% of traders has lost money, period. 100%. The difference is building strategy and sticking to the rules. Whatever rules you set for yourself. If you're not going to follow your own rules, then don't waste your time. Now, 100% of traders that have succeeded in this thing have broken their own rules. It's going to happen. The market you cannot control. And sometimes you're going to be in positions where you're going to lose more than 5% or whatever rules you set out there. You know what I'm saying? And I encourage you to dig out Meaning Gurus. Jump on YouTube, type in penny stock traders. I gave you my top 4 throughout this video. And continue to follow me, man, because I'm going to keep dropping videos like this here over at Pursuit of Freedom on YouTube. Hey, Pursuit of Freedom. Holla at you.